Hey everybody, Boris last week. Welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for June 5 to June 9 of 2017. And the week actually is going to be quite interesting for the comm dollars. We have some serious commodity news. On the Aussie side, we have the cash rate announcement on Tuesday, followed by the GDP numbers, which may actually be a little bit weaker given some hesitancy from the Australian monetary policymakers. Then the trade balance, and actually, I should add a very important point. We have the Chinese trade balance as well, which could be very, very important on the Australian side. Also, same day Wednesday. So Tuesday, Wednesday going to be very Aussie-centric days. And then end of the week, we have the Canadian employment data, which is 1 week later than the U.S. data. That'll be an interesting look to see how much of an impact that has. Market is looking for a better number than the number prior. So we'll see if that has a positive upside for the CAD. CAD has been under a lot of stress because oil has crumbled below the $50 a barrel level and has not been able to be recovering above that level. So overall, the focus on the commodity dollars should be quite interesting at the beginning of the week, with Aussie really kind of a key tell, because if you look at the charts right now, well, actually, before we look at the charts, let's take a look at the resistance support points. On the Aussie, the resistance support points still stay at the 73.50, 75 level, but now we've had a lot of back and forth two-way movement, and it suggests, I think it's going to be interesting to see just how well that resolves. That 73.50 is still very, very key support. That if it turns back down to the downside, opens up a much bigger run to the downside, in my opinion. Caddy holding the 34s to the downside because oil just simply has not been supportive of dollar CAD. If oil does pick up a little bit of a bit, and then we have better than expected Canadian labor data, certainly we can break the 34 to the downside. But for now, that seems to be very rock solid support. And the biggest trade of all, the best trade this week actually amongst all the major currencies was the Kiwi dollar, which seems to be well on its way towards 72. Big beneficiary of the carry trade, which I'm going to get into in just 1 second. Let's take a look at the charts first. And so you see the Aussie with very much this two-way price action. We had very, very weak Chinese PMI data that flipped the Aussie to the downside the day before, and today the Aussie had a huge run to the upside. And the reason why it's had a huge run to the upside really isn't due to any positive news on the Australian side. It's much more the negative U.S. side. It's the fact that U.S. rates are now being paired to possibly only 2 rate hikes in 2017, and that makes the carry trade with Aussie one of the higher yielders amongst the G20 a much more attractive trade. And what you saw today was a huge flow back to the carry trade as the market really paring back on U.S. interest rate hikes into the end of this year. And of course, Kiwi getting the same benefit in even a bigger fashion because Kiwi has a little bit of a higher yield. So it's really the carry trade that's moving everything around. And Kiwi has potential to go up to the 72 handle before it really meets some serious resistance, whereas Aussie kind of really very much resisting between 74.50 and 75. I think would have a hard time making any move there. A move to the downside would only, I think, be precipitated if the market started to worry that the RBA is actually moving back from neutral to dovish territory. Now, we have the RBA announcement. We'll have to see what they have to say. But if we have a weak GDP number that calls perhaps for more stimulus from the RBA, that certainly is going to take the Aussie for a tumble. So I'm watching this whole support area very carefully. It is a higher low, and it looks like a pretty decent support here. But if we can't hold the 73.75 support, that would suggest the Aussie could fall all the way down to the 72 handle as we go forward. And then, of course, last but not least, here's dollar CAD suffering because of oil. Look at oil. Oil is 47.69. It couldn't make it above 50, and now it's crumbling back down. If we come back down towards the 47s, it really puts CAD on a path towards 136, especially if we get very bad labor data coming up at the end of the week. It's going to be a solar event, singular event on Friday. There'll be nothing else to kind of keep the markets focused. So it could be a big event for dollar CAD as we go forward. Dollar CAD is also, of course, benefiting a little bit from the fact that U.S. News is not that great. So it's not really getting battered that badly. But still, on a relative basis, we're going to look at the cross in just 1 second. Dollar CAD remains very vulnerable to any negative news, especially against the Kiwi, which is certainly showing some very strong relative strength. It's the carry trade against the oil trade that's really going to be in focus next week as we go forward. So that's how the comm dollars shape up. We're certainly going to watch the Aussie at the front of the week. the caddy at the end of the week, and watch the carry trade all the way throughout. Wish you guys the best of luck, the best of trading. Boris, over and out.